Top story of the day. And when we look at our top story, we're actually going to go in-house for this one. We looked far and wide, and the best person that we can get for the job was right here underneath our nose the entire time. Tony Mulvey joins us in studio to talk about what just happened with the earnings call. Tony, thanks for joining us this morning.
I'm happy to be here. Obviously going to be here anyway, but you know, this is something I enjoy. It's probably one of my favorite weeks of every quarter when you start to see these earnings results come in, because it kind of goes with, we kind of get to see how our data stacks up to what some of these larger players in the space have done.
So Tony, just jumping into it, who are the big players that you've been watching for, waiting to hear from, and were there any initial surprises from these earnings calls?
I mean, obviously the big ones early, J.B. Hunt, Knight-Swift, CSX, I think Union Pacific's also reported. So, I mean, you've said two Class 1 railroads, the biggest intermodal player domestically, and then you've also had the largest truckload carrier report. And I think those are the big ones. I mean, I've spent a lot of time looking at J.B. Hunt just because of how their business mix kind of interacts, right? You've got the brokerage, you've got the intermodal players, you've got the truck side of the entire company. And then you got CSX, who saw some surprises in the quarter. I mean, you look at their operating ratio, it increased pretty significantly year over year. Again, not really a surprise when you start to dive into some of their data, but when you see the operations and some of the attrition that they saw, and this will go into you, Anthony, we've talked about the labor market, they saw attrition way higher than they expected, and I think that was a surprise. Kind of like when you think about what Target saw early in the first quarter, and now when they've kind of pre-released some of this, we have too much inventory, well, that kind of caught them off guard. This has caught CSX off guard.
And looking at that, especially being caught off guard, there was actually, I think we talked a little earlier, a decline in the amount of, rail workers, and their employment levels declined. Is CSX particularly having issues with holding on to people, or is this something endemic to the rest of the railroads as well?
Yeah, so I mean, CSX is having this issue with attrition, right? They want to have about 7,000 employees there for crew and crew starts, and right now they're at that 6,600 to 6,700. So just under that 7,000 that they're looking at to continue to grow. And I mean, it's kind of one of these surprises. I mean, if you look at the overall rail industry, especially in June, you saw a 200 job decline. So not a very big job decline, but when you look at the industry as a whole, the whole transportation industry added, 13,300 jobs in the month of June. So it was one of the few declines in the transportation sector as a whole. But I think it kind of goes into with almost the broader economy that we've experienced over the past 18 months to 2 years, is that if employees kind of have this optionality that if they didn't like what they were doing, they had the option to kind of trade up in jobs. And I think that's some of this. I mean, you think about construction, things like that, they're always in need. And what the rails are hiring for, those crew starts, it's that blue collar work. There are opportunities that you're not on the road. Same thing, it's the same issue that you've seen on the truck side, right? With hiring employees. People don't want to necessarily be away from home, and they kind of have this option to stay a little closer, work similar jobs, probably for the same, if not more money. And I think that's some of the issue that you're seeing. And it's an issue that you're going to hear, I think, a lot. Maybe not the attrition part, but the difficulties in the labor market. J.B. Hunt was no different, saying hiring was difficult in the quarter.
And Tony, this definitely, I think you hit the nail right on the head, especially when looking at the employment market, what we're seeing in the overall economy. With these specific earnings or this report, what are your thoughts going forward when you're looking at large carriers and smaller operations, owner-operators, as we continue to move throughout the remainder of 2022? It seems like larger players like J.B. Hunt are really being able to utilize a little bit more this quarter, a lot more help from owner-operators and things like that.
Yeah, I mean, that doesn't surprise me. What's interesting is another company that reported was Landstar, right? And their brokerage uses BCOs, right? They're business capacity owners, and that's their leased on owner operators. And what you saw in the quarter was the first quarterly decline quarter over quarter decline in those BCO numbers for the first time since, you really saw it. We're about the same level where we were in the second quarter of 2019. And really, what you see is carriers or smaller carriers, those owner ops, flood back to these larger fleets when times are starting to soften because it's how they can get freight a little easier, force dispatch, keep their trucks moving. Not really surprised to see some of these changes, but I did think the BCO data was a little interesting, and it kind of differs a little from what we've seen with J.B. Hunt. But ultimately, you're going to see some of these carriers that struck out on their own when the market was so hot flood back into some of these larger carriers that really haven't grown their fleets. If you look at Knight-Swift year over year, their truck count is pretty similar to where it was a year ago.
And looking into that, diving into those numbers, J.B. Hunt's company tractor count was relatively flat in their earnings, but they were actually able to attract around 800 more IC independent contractors year over year. Do you think it's structurally a little bit different? Are these owner ops that are moving back into mega carriers or enterprise carriers, depends on if you drive for one or not, is there something where structurally Landstar is less attractive than maybe J.B. Hunt, or is this something where maybe perhaps the freight mix volume or you have to do a little less work maybe if you work for J.B. Hunt?
I think it may be a combination. It's kind of hard to say. It's just their mixes are different. Just the operations of themselves are probably different. That I can't really talk to, but it is interesting to see that kind of shift. If you look year over year, you've seen Landstar's BCOs just explode. I think they added over 1,000 just in, I think it's like 1,200 in the past year, but it was that quarter over quarter growth. And if you look at it on a chart, that quarter over quarter growth in the BCO, it tracks almost dead on to the trucking cycles. It peaked in 2018, turned negative there in second quarter of 2019, kind of following that same trend, peaked in mid 2021. Now it's just turned negative. So it's definitely following this very similar trend to what we talk about in the trucking market. And I think that's why we pay attention to it a lot, because it kind of shows how that capacity is adjusting to market conditions.
Now, Tony, every single quarter when I hear some of these calls, there's some messages that are that you have to read between the lines as weren't quite explicitly stated. Were there any messages that you're reading between the lines here with these calls that you were able to glean out from these rounds of quarterly calls so far?
Obviously, there's one that really stands out. I talked about it yesterday on the spot. It's new president of J.B. Hunt, Shelley Simpson. Her comment right at the end of the call, it said, "We're seeing a seasonally normal July," and that one really stood out. But then it's also, we're not hearing from customers that we're seeing a sharp decline in demand. I think you and Zach talked about it yesterday on Freightonomics. Like, what customer is going to tell their carrier, hey, we're going to see a downturn, you're not going to get as much volume? No one's going to do that because it sets themselves up for rate increases that ultimately the market's saying shouldn't be happening. So I think those are two statements. If you look back at July historically, look at 2018, 2019, take the pandemic out of it. But really, you even saw seasonality last year in July. Granted, we were at such elevated levels that kind of masked that decline. It didn't feel like there was any decline. But look at volumes, look at rejection, look at rates through July. Even in 2021, you saw a decline. So I think that's, I don't want to put words in her mouth, but reading that tells me that there is definitely some softness in this market at the moment. We're not at 2019 levels in terms of volumes, but rejections aren't far off from 2019 levels. And rates, when you adjust them for inflation, really aren't that far off either. Now, that's spot rates. Contract rates are still elevated, but you start to see them move down. And I had a conversation earlier this week with Sonar with CFO at Emerge, and we talked about what we're going to see moving forward. And it's going to be some of these shorter bid cycles because shippers want to take advantage of some of this volatility and driving rates back down. They don't want to keep paying these rates. So I think you're going to see definitely over the next few this quarter and into Q4, you may see those contract rates really start to slow down. And I think that's what's going to be interesting, because when you think about these big carriers, what are they operating under? Majority contract rates. So once you see those start to kind of roll over, follow the spot market that saw the decline really happen there in March and April, it'll be really interesting to see what happens in Q3 and Q4.
Closing thoughts here. We've got a few trucking companies that I've reported already, but we're just now into earnings season. Do you think there'll be any other bellwether companies or bellwether earnings we need to look out for to kind of glean a few more ideas into the direction of the market?
I think, if you start to look at, really, it's going to sound weird, but look at all of them. And it's not look at what they did, right? Their results are probably going to be pretty good, considering majority of them do operate under those contract rates. Contract rates were well above where they were a year ago, which means revenues are, and then you have fuel surcharges that are passed through that are probably at record highs too. Guess what? Those are things that are going to generate some of these windfalls for carriers. It's what does management say about what's coming? And it's this reading between the lines of what they say, picking out some of their words and using it. Okay, what does that actually mean in the long run?
That's always the game, is really kind of reading between those lines. Tony, thanks so much for joining us this morning. And I got a sneaking suspicion this isn't the last we've seen of you this morning. Right now, we're going to go over to the headlines, and we're going to see what's been happening in the freight economy as of lately.